When it comes to Alibaba, what's the first thing that comes to your mind? Jack Ma, the iconic figure, or the affordable and abundant online shopping, or the stocks that even Charlie Munger regrets investing in?
Alibaba is one of the worst mistakes I ever made.
Well, whatever. It's definitely not just the open sesame. We have to see that the era of Jack Ma's Alibaba is now in the past. With the decline of its stock price, as you say, it's a time to take a fresh look at the remarkable company. With Jack Ma stepping aside, the men behind him are stepping into the spotlight. Yes, of course, it's Daniel Zhang. Over the years, we may have known him more as owner of an NBA basketball team and for those picture-perfect images with his wife. However, from the company's inception in 1999 until 2017, he served as the group's CFO and led the company to the New York listing in 2014, subsequently charging strategic investments. It can be said that Daniel Zhang has played a pivotal role in the birth and development of Alibaba. Many of us are familiar with the story of how he gave up a very high-paying investment job to follow Jack Ma in his entrepreneurial journey in Hangzhou. In the winter of 2000, Daniel Zhang and Jack Ma went to Japan to meet Masayoshi Son, faced with an investment of over $40 million for 49% stake. However, he flatly refused it. Even after returning to China, he risked offending others to negotiate the investment down to $20 million. He then built a series of fundings and investment for Alibaba, indirectly contributing to the rise of this historical business empire. In 2004, during the battle between Taobao and eBay, Daniel Zhang secured an $82 million financing deal for Alibaba, providing ample support for Jack Ma. So that's the reason why I write the title, The Man Behind Jack Ma. You got me, right? It can be said that in every crucial decision that Alibaba made in the capital market, from financing to listing to mergers and acquisitions, Daniel Zhang was the main decision maker. Having said all about this, what's the man's style of doing things? Maybe that's the most interesting part and you may be curious the most. Well, let's look at a quote from himself. For any opportunities when you have about 30% chance of success, that's when you can win the most. When the odds are too low, you might incur losses. With a 50% chance, you can only win a little. And with an 80% chance, it's basically a red ocean. This indicates that Daniel Zhang is a shrewd and insightful individual who keeps his cards close to his chest. He is truly a formidable player. In this era, Daniel Zhang's return to Alibaba is the best arrangement from my perspective. Why? If we think back more than 20 years ago, with the booming of the internet, we need entrepreneurs like Jack Ma to pioneer and to create. However, in today's economically challenging time, Alibaba needs a calm and mutual helpsman to ensure that it can navigate in the rough water. And who's better for this role than Daniel Zhang? Well, that's right. That's the right man for Alibaba. On the evening of September 10th this year, chairman of Alibaba Group, Daniel Zhang, announced in an all-staff message that the planned transition of management duties within the group on that day. He assumed the role of chairman of board of the Alibaba Group. At the same time, the former CEO of the group, Daniel Zhang, officially stepped down and also resigned from his positions as chairman and CEO of Alibaba Cloud. Let's take a look at the second man. Unlike Qiu Sai, Alibaba Group's new CEO Wu Yongming comes from technical background and was one of the earlier programmers in Alibaba. He has ever held important positions such as Chief Technology Officers for various key businesses within the Alibaba Group, including the B2B, Taobao, and Alipay. During his tenure, he also accumulated a personal fortune of up to 2 billion yuan, earning him the title of one of the richest programmers in the history. So next, what might be the main storyline of the two new leaders in the future? Just let's boldly speculate. Firstly, I think they will continue to promote Alibaba's internationalization. And secondly, they will continuously embrace AI more effectively. And thirdly, they will maintain market share in cloud computing. The last, continuing to be the leader in the e-commerce industry. As two leaders with deep investment backgrounds sufficiently, the listing process for 6+N will also enter the fast lane. In Alibaba's financial report on the May 2023, it was revealed that the Cloud Intelligence Group would go public within the next 12 months, operating independently from Alibaba in terms of equity and corporate governance, and introducing external strategic investors. Daniel Group is expected to complete its listing within 12 to 18 months, while Hema's listing is on the farthest track, aiming to complete it within 6 to 12 months. Of course, maybe some of you have already known that Hema's IPO has been suspended. And if you want to know the deep reason of it, please check my analysis report. Well, how will this change affect Alibaba? That may be the next very important topic we need to talk. As one insider from Alibaba's business organization reviewed, they used to emphasize corporations and positioning too much, resulting in a loss of competitiveness when facing external competitors. But now, everyone belongs to different business groups, so cooperation will certainly exist. But competition is also inevitable, and this is normal. The insiders also emphasize that this change needs time to adapt to it. In fact, during the 1+6+N process, each business organization is finding the most suitable positions for itself. In this August, DingDing became independent from the Cloud Intelligence Group and became one of Alibaba's own companies. Those close to Alibaba said that DingDing has always been an independent business under Alibaba, only overseen by Alibaba Cloud Intelligence Business Group, but operating independently. This independence benefits both the Cloud Intelligence Group and DingDing itself, as it solidifies their respective positions. The 1+6+N adjustment is undoubtedly reshaping the Alibaba's culture. So my friends, do you remember at the beginning of my video when I asked about your impression of Alibaba? Perhaps it's time to change those stereotypes. Of course, under the leadership of the new team of leaders, we're looking forward to how Alibaba will develop in the future. Now, as a shareholder and enthusiast of Alibaba, what most concerns everyone is how the stock price will perform in the future. I would like to see that the majority of Alibaba's revenue still comes from the domestic market and highly related with the pace of recovery in the domestic economy. Alibaba's performance in recent years has not been very optimistic because of the competition. It can only be considered as average. Therefore, my judgment on Alibaba's stock price is that it is currently fluctuating in the bottom range. Breaking through to the higher level will depend on the combination of the recovery of domestic economy and overall macroeconomic environment. I truly feel that it is impossible for people or for individual companies to develop in isolation from the times. ups and downs are inevitable. What's important is that we need to understand and adapt to them. Do you know in the opening of the Chinese Tao Te Ching says, the Tao that can be told is not the internal Tao. The name that can be named is not the internal name. Its core message is go with the flow. Currently, the varying economic conditions worldwide, to some extent, have an impact on the development of various industries, and Alibaba is no exception. What Alibaba investors can do is just wait patiently and let the bullets fly in the air for a while.